Most people think income is just income. You work, you get paid, and at the end of the year, you file your taxes. But there is one detail that can completely change how much you actually keep, and that's whether you're a W-2 employee or a 1099 contractor. On the surface, the difference doesn't seem that big. In both cases, you're earning money for your work. But when it comes to taxes, these two classifications operate in completely different systems. If you're a W-2 employee, your employer handles a large portion of your taxes for you. Every paycheck you receive already has taxes withheld, federal income tax, state tax if applicable, and payroll taxes like Social Security and Medicare. Your employer also pays half of those payroll taxes on your behalf. So while you might feel like you're earning less, a big part of your tax responsibility is being managed automatically. On the other hand, if you're a 1099 contractor, you're essentially treated as self-employed. No one is withholding taxes for you. You receive your full income upfront, but that doesn't mean you get to keep all of it. In fact, you're now responsible for paying both your income taxes and the full amount of payroll taxes. That includes the portion that an employer would normally cover. This is often called self-employment tax, and it can come as a surprise to many people who switch from W-2 to 1099 work. So while a 1099 paycheck might look bigger at first glance, the reality is more complex. Without proper planning, you could end up owing a significant amount at tax time. This is why understanding the difference between W-2 and 1099 income isn't just a technical detail. It's something that directly impacts how much money you actually keep. Because at the end of the day, it's not just about how much you earn. It's about how much stays with you after taxes. Now, let's break down the real tax differences, because this is where things start to matter. As a W-2 employee, your tax situation is relatively simple. Taxes are automatically withheld from your paycheck, and at the end of the year, you receive a W-2 form summarizing your income and what you've already paid in taxes. In many cases, this leads to a refund or a manageable balance, but the trade-off is limited flexibility. As a W-2 employee, you have fewer opportunities to reduce your taxable income. Most of your income is taxed as is, with only a few standard deductions or credits available. With 1099 income, everything changes. Because you're considered self-employed, you're now running a business in the eyes of the tax system. And that comes with both responsibilities and opportunities. First, the responsibility. You must track your income, calculate your taxes, and often make quarterly estimated payments throughout the year. If you don't, you could face penalties. But here's where the opportunity comes in. As a 1099 contractor, you can deduct business-related expenses from your income. That means you're not taxed on everything you earn, only on your profit. Expenses like equipment, software, home office use, travel, and even part of your phone or internet bill can potentially reduce your taxable income. This is a major advantage if used correctly. In addition, you may have access to retirement strategies that allow for higher contribution limits compared to traditional employee plans. This not only helps you build wealth, but can also reduce your taxable income in the process. So while 1099 work comes with more complexity, it also offers more control. The key is knowing how to use that control effectively. Without a system, it can lead to stress and unexpected tax bills. But with the right approach, it can become a powerful financial advantage. So which one is better, W-2 or 1099? The honest answer is, it depends on how you manage it. A W-2 job offers stability and simplicity. Taxes are handled for you. Income is predictable, and there's less administrative work. For many people, this structure makes it easier to stay on track financially. But that simplicity comes at the cost of flexibility. Your ability to reduce taxes is limited, and your income is directly tied to your job. With 1099 income, you have more freedom. You can control how you earn, how you spend, and how you structure your finances. But with that freedom comes responsibility. You need to plan for taxes, set money aside, track your expenses, and stay organized throughout the year. If you don't, the benefits can quickly turn into problems. The real difference isn't just in the tax forms, it's in the mindset. W-2 is structured, 1099 is strategic. If you approach 1099 income like a W-2 job, you'll likely struggle with taxes. But if you treat it like a business, you can unlock opportunities that simply don't exist in a traditional job structure. This is why understanding the difference matters so much. It's not about choosing one over the other blindly. It's about knowing how each one works and using that knowledge to your advantage. Because small decisions around taxes can have a big impact over time. And when you understand how your income is taxed, you're no longer reacting at the end of the year, you're planning ahead. And that's where real financial control begins.